This week, oil prices broke above 79 US dollars per barrel, a 10% slingshot move higher just within the last week. Now, this follows on from the OPEC meeting last week where we discussed with you massive buy opportunities from 72.50 up towards 74 US dollars per barrel. As you can imagine, we built into over a dozen trades with our clients at the Gold and Silver Club. And alongside this, we've seen platinum prices take the elevator down. In combination with our platinum sell short and the long position on crude oil, we've banked this week over 8,000 points profit with all of our clients at the Gold and Silver Club. And again, we've utilized CPI data, the FOMC statement as exit liquidity on the pump that we've had over the course of Monday, Tuesday and Wednesday, breaking out into the FOMC statement, again banking on strength. Then afterwards, what have we seen? Multiple metals and energies take the elevator down, which is very classic after an FOMC statement. So let's just break this down and talk you through it all in a bit more detail. If we just cast our minds back to this time last week, we had the OPEC meeting, and as a result, oil prices, they broke all the way back down towards 72 US dollars per barrel. Now, off the back of that, we had seen speculators, they'd increased their long position on oil to the point where over 85% had gone long. This was the previous week when oil prices, they broke above $80 per barrel. In the last week, we saw over 10% of fund positions, they got liquidated on oil with the break back down towards the swing lows. Nothing more than a massive opportunity to really load up, stack the position, and then just within the matter of less than a week, on the back of CPI data and the FOMC statement and the European Central Bank cutting rates, and the Bank of Canada cutting rates last week as well, oil prices, they've had the impulse move, the slingshot move we discussed. Just to go through the magnitude of that, it's been a 10% move in just a matter of 1 week. So the price has gone from $72 per barrel and it's broken above $79 per barrel. Do not underestimate how much profit you can make on a move like that when you built into over a dozen positions. Again, for that calculation, 8,000 points profit banked. Every 1 lot contract you would be trading, that's $80,000. Every 10 lot contract you'd be trading, if you've also stacked into the position like we have, that's over $800,000 of profit. Again, very simple opportunity for you to take advantage of. We talked about it last week and the week before as well. Just feel free to go and watch our reports or the YouTube shorts where we've identified this very specific trade opportunity where we've doubled down on crude oil. Now, alongside that, platinum prices, they continue to tank. So we've seen platinum prices on Thursday, they're broken all the way down to 950 US dollars per ounce. Now, again, we talked you through vulnerability that we've been expecting on gold and silver. Speculators, their overall positioning right now on gold is that 90% have gone long. So only 10% are short right now. They are all expecting the same thing, for gold to break back towards all-time record highs. And in an ideal world, everyone just makes money together. Everyone goes long, 90% of the market, they get on the long side of gold and they're all going to absolutely crush it. As you know, that's not how the markets work. So I still see the potential for a trap here on gold, especially as we get closer towards the end of the quarter, the end of the month. We're halfway through the year. As we get towards the end of June, you're going to see portfolio rebalancing. And alongside that, you've got quad witching next Friday too. So I'm seeing the setup post FOMC for more downside on platinum, which we're still selling short. We're keeping some exposure on that, and for the potential on gold and silver to roll over. I still like palladium down here at $900 per ounce or lower. The best price we've got so far on palladium is $892 US dollars per ounce. Immediately off the back of the FOMC statement just yesterday, palladium prices, they broke out to $930 per ounce, so quite quick 400-point breakout, but they're back towards $900 an ounce at the moment. So again, I like the price here of palladium, 900 or all the way back down towards the swing lows from February. If we get it, the price coming back down towards $850 per ounce, I think would be a fantastic opportunity. I don't know that it will get that low, but certainly if it does, I would look to capitalize on that. So the playbook that we discussed with you, that has all played out. Utilize the central bank news items and the CPI data over this week and last week as exit liquidity on the breakout to the upside. Look to get out of positions, look to bank on strength. Don't be the dumb money who just makes their trading decisions off the back of an actual FOMC statement or CPI data or the European Central Bank, because you can see exactly what's happening at the moment on Thursday. Everyone expecting the market to go one way, and now it's completely turned and we're seeing multiple markets start to see selling pressure. Problem that you've got now is any late longs coming into the market, they now have to deal with quad witching next week, end of month profit taking, end of quarter profit taking, and rebalancing of the portfolios as we get towards halfway through the year, which is historically more risk off for the market. So with that, this really does come down to understanding and utilizing data, statistics, market intelligence. Alongside that, understand the capital flows in the market. So what the hedge funds, money managers, banks, institutions, what they're doing in the market in real time, and understanding the capital flows and how that will impact each commodity, so you can time your sniper entries and also know when to bank your windfall amount of profit. Now, further compound that as well with the intermarket correlations, the ratios in the market, then of course the fundamentals, the macroeconomics, the geopolitics, and then learn and understand the daily, weekly, monthly, quarterly, real-time data-driven cycle for each commodity. All of this, it's going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.